In the last 4 weeks, we have witnessed a significant drop for the yen, and this could be as a result of a couple of fundamental parameters. High inflation has put a whole lot of pressure on the Bank of Japan, and it was only recently that the Bank of Japan governor insinuated that inflation might ease in the near term. But its 2% annual target is not likely to be achieved until 2025. And how has the market reacted to this recent development? And what are our expectations on the USDJPY as we head into the new week? Well, it's on this note I welcome you to yet another promising session as we take a technical dissection of the USDJPY chart. Since this is going to be a follow-up detail to my previous analysis, I would like to share with you some key moments that we had during the course of last week. Well, if we look at the USDJPY publication, which I normally share on my public platform, that is the TradingView platform, you will see that we had a couple of choppy situations that evolved around the market structure for last week, as we had some moments of buying opportunity and as well we had some moment for selling opportunities. And if we look at how the week started here, you will see that at the beginning of the week we had the situation figured out, where price action, though it has broken out of the 136.00 level, but as soon as it broke out of that structure, we saw how price action continued to consolidate within that area to further emphasize the indecision in this market. And you all know, whenever we do have this kind of structure, all we are looking out for is either a breakout or a breakdown of the channel to give us a trading opportunity. In fact, this consolidation went on for about 24 to 36 hours before we finally saw traces of an attempt by buyers to break out of that structure. And I think on the 27th, I identified the structure on our 15 minutes time frame where we anticipated a breakout of the 136.250 level after citing higher lows on the lower time frame. And price action broke out of that structure, and price action continued to climb to the upside. However, as soon as price got into the 136.750 level, we began to see selling pressure resume around that area, and it was at this point that the selling momentum for the week was initiated. Then price action continued in such a way that it dropped to the downside, triggering our sell stop order at the 136.550 level, and price action continued to find lower lows. And as soon as it got into the 136.00 level again, we saw the structure here, a beautiful temporary demand zone, with the hopes that if price action breaks out of the 136.150, we'll definitely want to be joining another wave of bullish momentum. But if a breakdown of the 136.0 level happens, we might likely be getting ready to sell. And look at what happened here. Price bullish momentum came in, but it didn't last long before this bearish momentum came in this market, taking us out of all buy positions here, and price action continued to drop to the downside. So this was the situation we had until the first trading day of this month, and we saw another bullish momentum come in. So we identified this bearish trend line to be our yardstick for trading activities. So if price action continue to trade within the ambit of the trend line, we shall continue to hold on to our bearish buyers. But if price action break out of that trend line, definitely this will be a sign of a momentum shift. Now what happened? We saw the breakout of that trend line, triggered another buy position here, and we were able to rather move all the way up into the 136.900. In fact, it was quite a lot of ups and downs in the market for last week, as we had some buy moments and we had some sell moments as well. If you do want to have a examination of how we took advantage of these opportunities, I will be dropping the link to the comments in the comment section of this current video. And if you are watching from my YouTube channel, you will be seeing it at the top right hand side of your screen. So with that being said here, let's dive into the current market structure, and we shall be taking an holistic perspective of what is really going on the daily time frame. Now, if you had been following me from my previous videos on the USDJPY, you will remember that we had this structure identified since the last quarter of last year, as we had a beautiful bearish trend line which has been emphasizing the strength of the sellers in this particular market. And not until a couple of weeks ago, we finally saw the breakout of that trend line here to give us a signal that sellers might not likely continue to respect that trend line anymore. And prior to the beginning of last week's trading session, this is what we were looking forward to, with the hopes that price action will continue to the upside. So what we did was to use the 136.00 level as a yardstick for buying opportunity, as if price action continues to trade above that level, we will be comfortable in our buy position. But as a way things are looking right now, it appears that price action has broken back below the 136.00 level, as currently price action is trading below the 136.00 area. Now the question at this juncture is, will this incite a sell-off in this market, considering the fact that price action has been bearish for the last 4 to 5 months now, to incite a sell-off in this market, where we might be seeing a situation where price will drop back into the trend line or the 131.00 level, a level which was broken to the upside at the beginning of the month of February. Now, you all know from a technical standpoint that whenever we do have a breakout of a structure like this, there is always a likelihood that price action will do a retest of structure to incite another wave of bullish momentum. So these are one of the things I want to be looking forward to here as we head into the new week. Another thing that could happen here is if bullish momentum begins again in such a way that price action finds itself above the 136.00 area, followed by buying pressure above that structure on our lower time frame, it will be a beautiful opportunity to trigger a trend continuation pattern. So these are the things we are going to be looking forward to going into the new week. And as a result of this, we need to take a microscopic dissection of this current structure here. As you can see, throughout the course of last week, price action has been caught within a range around that area. So we want to see what is really going on there, and if we could identify a market structure that we can use to guide trading activity for the week. But before I go down into the lower time frame, I would like us to scale into the economic calendar, as we have a series of macroeconomic events to look forward to, and I'm of the opinion that this week is going to be very, very volatile. And as a result of this, let's quickly run through the economic calendar here. And this is the economic calendar for next week. And the first major event is coming in on Tuesday, when the Fed chairman is going to be testifying in front of the lawmakers, the monetary policy report. Then this will continue again on Wednesday. So it's a long testimonial that we have there. Then on Wednesday, we have the ADP employment change, which we have some positivity in the here, as against the previous data of 106,000, we have a consensus of 168,000. So we are going to be looking forward to see the actual figure for this week and how participants in this market will be anticipating that event. Then on that same day, we have the gross domestic product for the Japanese yen, which we have a previous data of 0.2 and a consensus of 0.2 as well. So we are going to be looking forward to that one. Then on Friday, we have a series of macroeconomic events affecting the USD and the Japanese yen. We have the Bank of Japan interest rate decision. We have the monetary policy statement. Then we have the press conference for the Japanese yen on that day. Then we also have the almighty non-farm payroll coming up on that same day. Then we have the Michigan publication for the consumer sentiment index. So this week is laced with quite a lot of macroeconomic events to look forward to, and I'm of the opinion that we are going to be having a huge price movement for this week. And what we want to be doing right now is to position ourselves in such a way that we can catch this move whichever way it will be going. So if it's going to be a bullish one, we want to get ready. And if it's going to be a bearish one, we want to get ready as well. So join me as I scale down into the lower time frame. That is the 4 hours time frame, where I was able to identify a simple setup which we shall be using to guide trading activity for this week. And if we scale down into the 4 hours time frame, this is what you will see here. So let me reset this chart a little bit and look at what we have. So throughout the course of last month's trading session, it is very obvious here that price action has been bullish. And to further emphasize the strength of the buyers in this market, you can see how price action has been finding higher high, hereby transition into something that looks more like a ascending channel on this chart. And if we look at the ascending channel closely, you will see that I also have some trend lines within the ascending channel, which looks like it demarcates the upper part of the ascending channel from the lower part of the ascending channel. And if we look at what has been happening here in the last couple of weeks, you will see how price action has been trading along the upper part of the ascending channel to further emphasize the strength of the buyers in this market. But something interesting happened in the last couple of weeks here. I think throughout last week's trading session, we saw that as soon as price tested the resistant level of that ascending channel, we saw multiple rejection of that structure, giving us a clue that there are traces of sellers in this market here, negating all attempt by the buyers to break out of the 137.00 area. And as a result of this, I was able to identify a supply zone around that area. And if you look at what happened here during the course of last week's trading session, you will see how price action is trapped within the 137.00 level and the 135.800 area to further emphasize the indecision in this market. And if we take into consideration the impulsive move that got us to this point, you would agree with me that a retracement is long overdue from this current point. And if you look at the current structure here, it appears that price action is evolving into a reversal pattern at this point. And for us to have a confirmed reversal pattern, we need a breakdown of the neckline area to give us that signal of a sell-off in this market. And to emphasize the neckline of this area, if we connect these points together, we have something at around the 135.800 level, which has been a strong buying niche in the last 1 week. And as you can see, every attempt by the sellers to break down that structure has been negated by the buyers in this market. So as a result of this, I have a demand zone sitting around here with the hopes that if price action breaks down the 135.800 level, which also shares a beautiful confluence with the bearish trend line that demarcated the upper part of the ascending channel from the lower part, then this will be a beautiful signal that we might be going bearish at this point. And one thing I identified here, if you look at the current structure closely, you can see that the support line of the ascending channel falls around the 135.00 area. As you can see, it has been a very key significant level in the past here. So going into the new week, if price action ever breaks down the 135.800 or probably the demand zone here, selling pressure resuming below that structure, I will be looking out for selling opportunities below the structure. So if price action continues to the downside, definitely we want to see how price action will be reacting to that support line of the ascending channel to decide if we are going to be adding more position to our existing trade. That is, if price action breaks down that structure, or we might be getting ready for another wave of bullish momentum if a buy pressure resumes right above the support line to the upside. So these are one of the things I want to be looking forward to. Then another thing that we'll be looking forward to is if the demand zone here holds on and the buy pressure around this area continues during the early hours of the week, then we might likely see another wave of bullish momentum incited from above the trend line here to the upside. So these are the things we shall be looking forward to as we head into the new week. And at this point, I'll be pausing this video, but be rest assured that I will be jumping right in the comment section to give an update on what my expectations are after monitoring how participants in this market will be reacting to this current structure during the early hours of the week. I hope this video has been of immense help in making your personal decision on the USDJPY for the week, and if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Dark Sherry so that you don't miss out on all of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section as usual on Monday as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.